There's quite a stir happening with this big-ticket deal that's got everyone talking. Recently, a $50 billion agreement was signed between Saudi Arabia and China, sparking a lot of discussion. The United States feels a little left out in the cold. Hello everyone, it's me, Yernar, and today we will explore the details of this historic deal between two economic powers and discuss its potential impact on the global economy and trade. We will also look at the motivations behind this agreement and what it means for other countries in the region. So now is the perfect time to hit the like button and subscribe to the channel to help it grow. On 1st August, Saudi Arabia's Public Investment Fund, PIF, released some exciting news for all of us. They've just announced signing half a dozen agreements with leading Chinese financial institutions, a monumental deal valued at a mind-blowing $50 billion. Now, if that's not a game changer, we don't know what is.
While specific uses of the funds have not been detailed, this move signifies a major shift in global financial dynamics. This also follows the successful launch of two exchange-traded funds tracking major Saudi companies on Chinese exchanges.
But who are these financial big hitters? Well, they're none other than the industry giants: China Construction Bank, Agricultural Bank of China, China Export and Credit Insurance Corporation, Bank of China, Export-Import Bank of China, and Industrial and Commercial Bank of China. Observers and analysts alike believe this move is integral to Saudi Arabia's grand plan to bolster economic ties with China. It's all about going with the flow of the ever-changing global energy scenarios. Middle Eastern countries, especially Saudi Arabia, are at an interesting crossroads. They're present between challenges and opportunities. They have a reputation to uphold as one of the world's leading oil-exporting nations, sitting on a wealth of petroleum resources. But now, the world is turning a new leaf. There's a rise in new energy industries and a global push to cut down dependence on fossil fuels. The winds of change are blowing, and Saudi Arabia is embracing them. They're seeing the light at the end of the tunnel, the need for diversified economic backing for a stable and sustainable future. In simple words, Saudi Arabia is stepping up to the plate. They acknowledge the need to pivot and move towards a diversified economic landscape. The limelight is shining brightly on China's strategic roles in the global market. Industry insiders have a lot to say about this. They believe that the public funds forays into China showcase worldly investment acumen and strategic insight and signify a strengthening financial bond between China and Saudi Arabia. As they say, the show must go on, and the future is bright with the progression of the 2030 vision. The expectation is that investment activities in China undertaken by public funds will continue to broaden and intensify. It was back in the year 2016 when the Kingdom of Saudi Arabia first introduced its Vision 2030. The idea is to put the kingdom on a path towards economic diversification via a series of economic and social reforms. This vision paves the way towards reducing dependence on oil, fostering sustainable development, and enhancing the citizens' quality of life. And let's not forget, where there's a will, there's a way, and capital certainly has a major role to play in this vision. The Chinese market and its enterprises are becoming some of the prime destinations for Saudi capital. However, it's not all smooth sailing. The United States has consistently pressured Saudi Arabia to keep its distance from China and other countries in the BRICS group. The reason is the concerns of geopolitical and economic nature. Moves to halt the transfer of crucial technologies, infrastructure, and data to China are driven by a desire to shield American economic interests. It seems the Saudi kingdom is drawing closer and closer to China. The recent signing of an understanding worth $50 billion with several Chinese financial establishments is a clear testament to that. This isn't just a random fling, though. It's all part of an elaborate strategy the Saudis have put together. Dubbed Vision 2030, the goal is to cut down the country's reliance on oil exports and broaden its economic alliances. One of the aspects of this plan is partnering with the Bank of China to boost bilateral capital flows via debt and equity investments. The ultimate endgame is a stronger economic bond between the two nations. The signs of Saudi Arabia's pivot towards China are evident in more ways than one. In 2023, funds from the Gulf region invested in China skyrocketed from a meager $100 million the previous year to an impressive $2.3 billion. This tremendous uptick shows how the economies of the Gulf and China are becoming increasingly intertwined, and those signs are there regardless of any concerns folks in the US might have. Saudi Arabia's bond with China is not just strategic, but it's also taking a commercial form. The state-owned oil company, Saudi Aramco, is cutting some pretty substantial deals to grow its investments in China and cement its spot as a leading crude oil provider. These agreements, which are the biggest since Chinese President Xi Jinping's visit to Saudi Arabia, are set to make oil trading in the Chinese yuan more convenient. And who knows, it might even challenge the dollar's stronghold on the global oil market. Let's cut to the chase. Despite claims that Washington has not pushed Saudi Arabia into a corner to pick between the United States and China, telltale signs point towards Saudi Arabia forming a deeper economic bond with China. This demonstrates Saudi Arabia's realistic outlook on global affairs, reaching out to seize opportunities that expand beyond traditional alliances. No one can deny the increase in numbers as evidence of this trend. In 2023, the trade relationship between China and Saudi Arabia took a significant leap forward. In the first quarter of the year, the country's two-way trade made a colossal jump, hitting approximately $24.3 billion. Saudi crude oil exports to China have had a significant impact, reaching $13.7 billion. Conversely, China balanced the scales with its electronic imports, which clocked in at about $10.7 billion. That's just dipping our toes in the water. If we look at the entire fiscal year of 2023 in detail, China's imports from Saudi Arabia were nothing short of impressive. They skyrocketed to an astounding $64.36 billion. Now, if that doesn't reflect the strength of their economic relationship, what does? Change is the only constant. May 2024 brought in some exciting changes for both China and Saudi Arabia. The two have witnessed an impressive rise in their trading relations, with China's exports to Saudi Arabia climbing a notable 11.8% from the previous year, while imports also grew by 3.51%. This consistent growth paints a picture of an unmistakably strong economic handshake between the two nations, a handshake that only seems to tighten with time. They are heavily collaborating in sectors that run the gamut from technology to logistics and manufacturing. We've all heard the phrase, "Don't put all your eggs in one basket." China and Saudi Arabia are taking that old adage to heart. They recently made a significant move to reduce their dependence on the mighty US dollar. Through a mammoth currency swap agreement worth around $7 billion, both nations now have the freedom to settle trade in their local currencies. This is another step towards economic independence. This agreement spans 3 years, with the possibility of extension. This means that they can conduct direct transactions of up to 500 billion yuan or 260 billion Saudi riyal without converting to US dollars. This innovative move is part of their de-dollarization strategy, an endeavor to shake off the global trade's dependence on the US dollar. China is leading the charge in this area, making inroads to promote the yuan's internationalization. This agreement with Saudi Arabia is a milestone in achieving this goal, and the significance of this strategy cannot be underestimated, especially considering Saudi Arabia is the world's biggest oil exporter and China the largest energy consumer. The journey of 1,000 miles begins with a single step, and this currency swap agreement is forging an increasingly intimate financial relationship between China and Saudi Arabia. Over the past few years, their partnership has grown. It looks set to support Saudi Arabia's 2030 vision, an ambitious blueprint that aims to lessen its reliance on oil by fostering development in technology tourism, among other sectors. History has a habit of repeating itself. This is true when it comes to the age-old bond that exists between the Chinese dynasties and the Arabian Peninsula. The good old Silk Road played a key role in creating these connections. Admittedly, not many were as deep-rooted as this one. On July 21, 1990, Saudi Arabia and China decided to make their relationship official. It was a game-changing moment in Saudi Arabia's foreign policy, diversifying their alliances from primarily Western-focused to a broader scope of international partnerships. Back in the 1990s, the two countries began a bit shy with their financial exchanges, with basic commodities as the primary focus of their bilateral trade. However, as the new era dawned, it was like a startup journey on steroids. Cooperation between Saudi Arabia and China has grown at an incredible rate. In 2004, the total trade was a decent $3 billion. By 2008, it rocketed to $25.4 billion. That, dear readers, is the equivalent of around 40% compound growth every year. The 2010s saw a new chapter in this flourishing relationship, driven mainly by China's burgeoning appetite for energy resources. And guess what? By 2015, China had taken the top spot on Saudi Arabia's speed dial as their largest trading partner. Fast forward to 2021, and the total trade between the two nations hit $42.36 billion. The Chinese didn't just sit on the sidelines either, importing $10.7 billion worth. In 2019, Saudi Aramco, the national petroleum and natural gas company of Saudi Arabia, made a deal worth $10 billion. This contract was to build a refining and petrochemical complex in China, as part of the Belt and Road Initiative. Political affairs have also taken a fruitful turn. High-level meetings have been the cherry on the cake, strengthening the bond between these two nations. In December 2022, China's leader, President Xi Jinping, visited Saudi Arabia, resulting in the signing of a series of agreements, 35 contracts worth $50 billion covering a wide range of sectors. Aside from politics and money, there's been quite a cultural exchange too. From education scholarships to tourism, the interaction's been rich. Thousands of eager Saudi students have made their academic home in China, and this has opened the floodgates to Chinese tourists visiting Saudi Arabia. When it comes to tech, there's no denying the crucial role of Chinese titans like Huawei in sparking Saudi Arabia's digital makeover. A key part of Saudi's Grand 2030 vision strategy involves cozying up with such tech giants. But there's been a bit of a plot twist in the grand scheme of things. In June 2024, the 50-year agreement between the United States and Saudi Arabia, known as the petrodollar agreement, expired. This old deal required Saudi Arabia to sell oil exclusively in dollars and stash the leftover oil revenue in US Treasury bonds. In return, Uncle Sam offered military backup and economic aid. But now, Saudi Arabia can trade oil in a variety of currencies, including the Chinese yuan, euro, yen, or even digital currencies. Such prospects may shake the status of the dollar as the world's reserve currency. So it's intriguing to think about what lies ahead for the oil triangle of China, Saudi Arabia, and the United States. Share your thoughts in the comments and don't forget to hit the like and subscribe to the channel. Thank you for watching and see you in the next video. Bye bye.